Well, there are a lot of great channels talking about the everything bubbles, and rightfully so, because it seems as though everything's in a bubble. And we're watching them continue to inflate and wondering when it's all going to just pop. But while we're distracted by the bubbles, there are two very important things we want to discuss today. One is a sagging demand for U.S. Treasuries. Number two, an ever-growing demand for gold. What might we see in the gold market in the very near future? Well, I have a chart that I want to share with you that I believe will tell the entire story. Thank you for joining me. Hope you are doing well. I'm Ric Bender, and welcome to Finance Lab. There's a lot of great channels out there pointing out the debt bubbles that we are dealing with in the U.S. and doing a fantastic job of the how and the why, and also followed by the speculation of when these debt bubbles are going to collapse. Now, just for a thought experiment, what if the Fed simply doesn't allow these debt bubbles to collapse? Now, you and I know that mathematically speaking, at some point in time, well, it's going to collapse. But we don't know when, do we? 1 year, 2 year, 10 years, 20 years? How long can they keep this thing going? And as the Fed continues to intervene and manipulate to keep the asset prices rising, well, what's going to happen to the average American with inflation and the cost of living? A lot of people are going to get hurt, financially speaking, as the Fed keeps these debt bubbles inflated. But what are we seeing in the economy? And for those of us that are in the gold market, what are we learning right now? There's a lot of conversation, as you know, about the gold bull run. Many are saying there's plenty of room in the gold bull run. Others are saying we could be close to or actually in a super cycle. Now, I'm about to show you a chart that points a very clear picture about the gold market. Central banks and the bond market is telling the U.S. government that this debt is becoming ininvestable. And the bond market and central banks are telling you and me that it's time to invest and hold a safe haven. Treasuries now, what we are seeing is a sagging demand for U.S. Treasuries from foreign investors, but an ever-growing demand for gold. And this is a very loud picture, and I'm about to show it to you so you can see it. But I want you to realize something. We have what we believe a rate reduction maybe come September. What if we saw a 1% interest rate? Let me ask you this. Will gold price react upwardly if there's a rate reduction? The answer is yes. If the Fed keeps inflating these bubbles to continue asset prices to climb, will gold respond positively in the price? The answer is yes. Because the U.S. is no longer the safe haven. The Treasury is no longer the safe haven. As they attempt to introduce product that might convince the foreign investors to buy it, they are buying more and more gold. The message is our long-term debt is simply no longer attractive. So let me show you this chart. And I think this is a very important chart. And what I love about it is its simplicity and the story it tells all of us. I want you to look at the yellow, which is gold, the representation of central banks buying gold, and the blue, which would be U.S. Treasuries. And this is the percentage, okay, clearly seen in this chart. We can see in the early days of the 70s to 1996, well, there were more foreign investors buying gold. But we notice the chart has a change around 1980. You notice the gold buying was continuing to climb. And then in 1980, there's a sharp decline. The trend changes. What happened? Paul Volcker Paul Volcker came in and was fighting and wanting and seeking to beat inflation. And because of that, well, central bankers were having a little bit more confidence in U.S. treasuries. So the gold buying slowed dramatically. Now, as we continue, we're now in 1995, 1996. There's major problem happening with Mexico and the pesos and things of that economy. And there's a belief that the safe haven now is the U.S. once again. So we see the gold buying continue to decrease while the U.S. treasuries now are the attractive safe haven. And people, investors, central banks are buying U.S. treasuries. It's the safe place to be, the economy of the U.S., money printing, so on and so forth. You can even see the drop in confidence around 2008, 2007. You can see the chart change. Ben Bernanke comes in and he begins the MMT faucet. Now, notice, dramatic change. Notice the yellow and the blue cross at 2025. For the first time since 1996, gold buyers are outpacing treasuries. This is a huge, huge picture for all of us. Central banks buy gold for multiple reasons. Some buy the gold just to simply protect themselves from sanctions, because the U.S. is often weaponizing, as you know. Other central banks buy gold to protect themselves from potential financial crisis. Other central banks buy for both reasons and even more reasons. The realization that the devaluation of fiat currencies and the realization of the central banks that the U.S. debt is becoming ininvestable because the debt is too high. It's way too high. The comfort level of buying U.S. debt now is just uncomfortable. So the chart that we were just looking at tells the picture that central bank gold buying is just picking up. That gold bull run is just beginning. Now, we have to ask, because we can't see beyond this point, is it possible that this activity of central banks buying gold continues? I believe the answer would be yes, because our government spending is continuing, our debt is continuing to climb, and quite honestly, what we're seeing in terms of activity purchasing our long-term debt, our U.S. treasuries, the interest just simply isn't there. So the chart is telling us foreign central banks now officially hold more gold than U.S. treasuries for the first time since 1996. If you think buying gold and this streak is ending, I really don't agree with you. You can look at what happened in the 70s. You can see the changes with the Federal Reserve and its management. You can see the changes with the gold and the treasury based upon the activity because of our economy, because of our debt, because of the quality of our debt. This is likely the beginning of what some say is the most significant global rebalancing we've ever experienced in recent history. That's quite a statement. The bond market, central banks are telling the U.S. government there's a rebalancing. The bond market and central banks also tell us, as we look at charts like this, that the safe haven is gold. Central banks believe it, and they are buying it and will continue to buy because they're looking and running to safety. I do believe the gold bull run has just begun. And I do believe with what we hear from President Trump, lowering interest rates, weakening the dollar, these things are going to help gold and the other metals to continue to increase, at least in my opinion. Well, thanks again for joining me today. I do appreciate you spending time with me. And if you like what we're doing and you haven't subscribed, consider subscribing to the channel. You may also want to share this video with a friend. I appreciate you being here, and I look forward to seeing you next time.